From our previous lecture, we have learned how to measure sales revenue and how to measure cost of goods sold. If we deduct cost of goods sold from sales revenue, we get gross profit. But there are many other expenses incurred by a business other than cost of goods sold. So during this lecture, we'll try to elaborate those expenses on the profit and loss statement. Expenses of the business represents what the company spends. Let's look at the profit and loss statement of Bata Shoe Company Limited. The top line starts with the revenue, then cost of sales or cost of goods sold are deducted from the revenue. Then we receive gross profit of Bata Shoe Company Limited. Then administrative and other expenses are deducted from gross profit. Then we receive operating profit, and from the operating profit, finance income and finance expenses are adjusted, and then we receive net finance income, and from the net finance income we can get profit before contribution to workers' profit participation fund. Then taxes are deducted, and after deducting tax we receive the profit for the year, and this way we get to the bottom line of profit and loss statement of Bata Shoe Company Limited, which is total comprehensive income for the year. So what expenditure should be accounted for? There are cost of goods sold, which is direct cost, and there are indirect cost or expenses. For example, selling expenses, expenses of the marketing department, or administrative expenses are indirect costs. Companies usually have head offices. There are costs involved with the head offices. In the meantime, employees are working in the back offices, which are also part of administrative expenses. Companies also need to consider impairment losses and depreciation. So most companies has liabilities which generate interest expense, and companies also need to pay taxes based on the tax law of the country or region. So we know that warehouse is a kind of indirect cost for the company, and company also need to consider depreciation on their fixed asset or on their machineries. Let's look at the layers of expenses. First of all, if we deduct cost of goods sold from net sales, we get the gross profit. Then, if we deduct indirect costs from the gross profit we get operating profit. Other incomes are added with operating profit, and we get earnings before interest, taxes, depreciation, and amortization. Then depreciation or amortization costs are deducted from earnings before interest, taxes, depreciation, and amortization. Then we deduct interest expenses from EBIT, and this we receive earning before taxes. Finally, we deduct taxes from earning before taxes, and we reach to the bottom line of profit and loss statement, which is net income or net profit. Is it all? No. We should also consider notes to the profit and loss statement to find out the future direction of the businesses. In this case, we should consider write-downs on inventories or property, plant, and equipment. Some property or plant, equipment, and inventories are needed to be write down. Then, on many cases, businesses are restructured due to a loss operation or due to some other reasons. And businesses also usually have disposals of property, plant, or equipment or investment if a equipment is faulty, or if a equipment has received has reached to its end of its lifetime, then it needs to be disposal by the businesses. Then there might be some discontinued operations due to the loss or inefficient operations of a business unit. There might be also some legal issues with the businesses. These are not all. There could be some other notes to the financial statements. We should consider all the notes to the financial statements, and if we analyze these notes to the financial statement, we'll receive a future direction of the businesses, and these future directions will help the investor to get the value of the equity, or to predict the value of the equity. Now, next lecture we'll focus on the statement of the cash flows, the statement of shareholders' equity, and notes to the financial statements.